Top 5 scandalous financial frauds of all time. Have you ever been scammed? No one wants to be the victim of this type of manipulation, especially if it involves being stolen from. After all, money doesn't grow on trees. For most people, it's a struggle to earn and keep up with daily expenses. Money is our financial tool for survival, so it's natural that most individuals become greedy and find different ways to generate more cash. However, not all individuals come up with the most simple plans to multiply their wealth. Financial scams come from all sorts of kinds and backgrounds. But did you know in the United States alone there are more than $5.8 billion worth of scams in 2021 with an average of $500 worth of losses per person? These financial catastrophes cost hundreds, thousands, and even billions of dollars, damaging other businesses and impacting millions of people. In this video, we examine the top 5 financial scandals that have rocked the world and shaken it upside down. Okay, here are the top 5 most scandalous financial frauds of all time. Number 1. Sam Bankman-Fried's FTX bankruptcy. The American public has seen several Ponzi schemes, but this is the biggest one in recent times. Just when we thought 2022 was about to end peacefully, news slammed that Sam Bankman-Fried, the founder and former CEO of FTX, defrauded $1.8 billion to his investors. Say what? The central cryptocurrency platform FTX's bankruptcy and subsequent demise profoundly impacted the developing financial sector until American authorities charged Mr. Bankman-Fried with several economic offenses and infractions relating to campaign funding, including wire fraud and money laundering. This 30-year-old was known as the paragon of crypto and had superstar status. But until all of FTX's network of over 130 affiliated companies, including its trading arm Alameda Research, have declared bankruptcy, FTX may have more than 100,000 creditors chasing after him, with a total of assets and liabilities estimated to be between $10 billion and $50 billion. Ouch. So how did this tech tycoon reach his downfall? He redirected his investors' money to his private hedge fund and used those assets to finance his investments. He bought real estate, used the money to feed his opulent lifestyle, and made substantial political donations. Mr. Bankman-Fried masterminded years of deception and used that money for his gain. Between 2019 and 2022, he raised $1.8 billion from investors by orchestrating a vast years-long swindle. Due to the accusations, federal authorities charged him with 8 accounts of fraud, and with further investigation, he could end up in jail forever. Number 2. The fall of Enron Corporation. Enron Corporation was based in Houston, Texas, and was a successful company with 7 thriving industries, or so we thought. They supplied natural gas, telecommunication, papers, water, media, and more, and employed over 20,600 people. They even reported revenues of almost $101 billion back in 2000. However, like every success story, there's also a downfall. The year after they claimed they earned considerable revenue, the business covered substantial trading losses, resulting in one of the worst financial scandals in U.S. history. In 2001, it was discovered that the corporation had been concealing billions of dollars in bad debt and boosting earnings at the same time by abusing accounting rules. The controversy caused Enron's share price to drop from almost $90 to under $1 a year, causing shareholders to lose nearly $74 billion. Yes, you heard right, $74 billion. The company's CEO, Jeff Skillings, and former CEO Kenneth Lay concealed billions of dollars in debt on the business's balance sheet. Additionally, they had pressured Arthur Andersen, the company's auditing firm, to overlook the problem. So what happened to those involved in this scandal? Naturally, the company filed for bankruptcy and was closed down. On the other hand, Kenneth Lay passed away before completing his sentence, and Jeff Skillings received a 24-year prison term. As for Arthur Andersen, his company eventually ran out of business due to this scandal. As a result of the scandal, numerous new laws and regulations have been passed to improve the accuracy of financial reporting for publicly traded corporations. Number 3. Bernie Madoff's infamous swindle. If there's one adjective to describe this scandal, it would be shameful. Bernie Madoff ran a Ponzi scheme for at least 17 years that defrauded 37,011 investors and billions of dollars. He was smart. That's the truth. Imagine at 22, Madoff established his first investment investment firm in 1960. By the late 1980s, he was making about $100 million a year and had been a significant force in promoting electronic trading systems. In 1990, 1991, and 1993, Madoff presided over the NASDAQ stock exchange as its chairman. However, his business plan was all a coup to defraud his investors. So, how did his business plan work? Early investors received earnings from the Ponzi scheme Madoff ran, although they summed that more recent investors had given him to invest. Say what? But like all Ponzi schemes, the new investments eventually fell short of the fictitious earnings that the earlier investors had come to anticipate. Madoff put the money he received from clients and banks and kept up to $483 million in interest, rather than investing it. In 1999, the SEC initially started looking into Madoff. Financial analyst Harry Markopoulos complained to the SEC in 2000, but he kept trying until 2005. To his success, Madoff had to pay the prince. He received a 150-year prison term in 2009 and a $170 billion forfeiture requirement. Lucky for Madoff's victims, in December 2008, $2.7 billion was given back to Madoff's investors. Number 4, the Lehman Brothers. The Lehman Brothers were filthy rich, but one wrong move drove them to bankruptcy. In February 2007, Lehman Brothers stock was trading at $86 a share, giving the business a market value of nearly $60 billion. By 2008, the Lehman Brothers started the new year with gracious beginnings and were even ranked the 4th largest investment bank in the United States. Because of its humongous success, this allowed them to try the Glass-Steagall Act, which allowed them to offer both commercial and investment banking services. However, what they thought was a decision that would ultimately decrease their wealth became a fatal one that would end the company. Over 77% of Lehman stock fell in the first week of September 2008. The CEO at the time, Richard Fuld, tried many strategies, including a spin-off of the business's commercial real estate assets to maintain the company's credibility with investors. However, despite the efforts, the increase in credit default swaps on Lehman's debt caused investors to flee. On September 15th, Lehman Brothers were compelled to declare bankruptcy with a $619 billion debt, which caused a final 93% decline in the value of the company's equity. Number 5, Health South. Of course, it's never a good idea to fabricate revenue reports. However, this didn't stop Richard Scrushy, the company's CEO and founder, from forcing his employees to inflate their revenue so that he could control the company's stock and attract new investors. Back in the 1990s, the company had experienced rapid growth and had acquired many other healthcare-related businesses at the time. With sales worth $75 million in late 2002, the company became one of America's largest healthcare service providers. However, because of the constant fabrications, one employee decided he could no longer lie, and so he filed a report that resulted in an investigation. In 2003, SEC revealed that Health South had overstated revenues by $2.8 billion and a scandal broke. The effects of the scandal were immediate as the stock dropped 97% in a single day, and then from billions of dollars their net worth fell to a measly 11 cents. Sadly, that was the end of his company. Insane, right? So what do you think about these scandals? Let us know in the comments. Also, don't forget to click subscribe, hit that bell button, and like this video to support our channel if you haven't yet.